All right. All right, guys. Hopefully everyone had a good weekend. Yeah, last week was pretty interesting, watching the market rally to new all-time highs on the NASDAQ and S&P. The Dow was interestingly down on, I think it was on Thursday that it came down after that pop-up. The Russell was down on the week, which was interesting. Small caps are very, very weak right now. And we're being led again by those mega caps like Apple, Tesla, Microsoft, Google, Facebook, so on and so forth. One sec. Oh, we're going to get them in there. I'm just going to open the lobby so that whoever wants to join can join. There we go. Perfect. Yep, usual disclaimer, guys. Do your own research. This is all just for educational purposes. This week, we don't have as much activity with the data, but we have Chicago Fed National Index tomorrow. We have on Tuesday, Case-Shiller National Home Price Index, Consumer Confidence Index is going to be important for August. New home sales, durable goods orders, core capital goods orders on Wednesday. Thursday, we have jobless claims initial for state and total, continuing jobless claims, GDP revision, and pending home sales index. And then on Friday, we have personal income, consumer spending, core inflation, advanced trading goods, Chicago PMI, which will be important as well, and consumer sentiment index final for August, right? So keep an eye on the consumer sentiment index because that's a indicator of confidence the consumer has in the economy and their willingness to spend money, their current employment situation as well, right? So we discussed it a few weeks ago what that is, and obviously if you want to go back and watch the video from 2 weeks ago and analyze the current numbers, you can do that as well. So I got a bunch of questions this week about stock splits and how they affect options. So I thought I'd create a slide on this and discuss it a little bit, right? Because obviously Tesla's doing their 5-to-1 stock split end of the month, and Apple's doing their 4-to-1 stock split, right? So, well, what are stock splits, right? Well, stock splits increase a company's total number of shares outstanding, right? They do not change the company's market cap, right? Which is the total value of a company, right? And it's found by multiplying the share price times the number of shares outstanding, right? Stock splits divide a company's existing shares into multiple shares and are done to increase the liquidity of shares. That's the sole purpose of it, right? How do stock splits work? Well, let's say you have company ABC, right? And they're trading at $100 and they have 10 shares, right? So they're valued at $1,000 market cap. They declare a 4-for-1 stock split. This means that there will now be 4 times the number of shares outstanding. So 4 times 10 is 40, right? Trading at a quarter of the previous value. So 100 divided by 4 is 25. The company is still valued at $1,000, but they now have 4 times the number of shares, which increases the level of liquidity in the stock. This has the benefit of allowing for more optimal price discovery in the market, right? Why do they occur? Companies decide to perform stock splits to reduce the share price, since high share prices can act as a barrier to purchasing shares for investors, both new and lacking in funds to purchase higher price stock. So, Amazon, for example, is very expensive right now. Most people can't afford to buy that. Tesla right now is over $2,000. Most people can't afford to put $2,000 into 1 share of a stock, right? Apple's now almost $500 a share, and same thing goes for that, right? The primary goal in doing a stock split is to make shares very accessible to all investors, right? And really all market participants overall, right? The more market participants holding shares in a company, the less volatility the shares will experience, because more people are holding it, less people are inclined to sell at any given time. You don't have one shareholder selling a massive portion of shares, causing a huge drop in the stock price, or one shareholder buying a massive number of shares, causing a huge spike in the stock price, right? And how does a stock split affect existing options, right? That's a question I'm getting a lot because people are wondering what's going to happen to my Apple call option after the August expiration or after August stock split occurs, right? If you're holding an option for September or October or January, right? You want to know what's going to happen to your contract, right? So, for example, let's say that a stock is splitting 4-1, and you have a $100 strike call option on the stock, right? That means you're going to have 4 new contracts, right? So instead of having one contract with a price of $4, right? For example, let's say you pay $4 for a 100 strike call option, right? You're going to have 4 contracts at a quarter value of the strike price. So in this case, 100 divided by 4 is 25, right? And each contract will now be worth $1 instead of being worth $4 for one contract. So you're in the same value overall for your position. You just have now 4 contracts instead of 1 contract, right? Everything else will remain the same. So hopefully that clarifies how that works for anyone holding options on Apple or Tesla that are playing the stock split. And again, it doesn't add any value at all to the corporation. So it's a very, very misleading notion that people have that stock splits are good for shareholder value. I mean, they do occasionally cause stock prices to go up, but there's no inherent reason why that is, right? It's pure speculation. So now what we've seen the past few weeks, we've seen Tesla rally from 1,300 and change, and I can pull up the chart on that too. Just find it here, one second. So Tesla over here, and I actually drew some diagrams here, one sec. So you can see that Tesla was over, I think it was over here, right? When they announced their split. And it went from 1364 low to now it's at 2042. So it had a rally of roughly 52% in the span of, I believe this is 9 trading days, based on a stock split occurring, which is ridiculous, right? Especially when you factor in that the stock is just insanely overvalued, right? I don't care what bulls are saying about the stock. It is insanely overvalued. You can't argue one way about that, right? And that'll bring us to our next discussion after we analyze Apple as well, right? Because I wanted to talk about Apple too. So Apple, same thing happened with them. They reported earnings. They announced a stock split during their earning report a couple weeks ago. And what happened? They went from 375 all the way up to now 498. So now basically they're up about 30%. They're the largest company in the world. They're now valued at, I believe it's $2.1 trillion. And a lot of this rise has to do with the fact that they're splitting their stock, right? 4-1. And that occurs end of August, right? So again, it doesn't add any shareholder value whatsoever. It's purely a mechanism to create lower share prices to make them more accessible to the average investor. And given that everybody and their mother and grandmother is trading nowadays, I guess it was a wise decision on the basis of Tesla, for Tesla and for Apple, because they're going to get newer investors into their stocks, right? But it doesn't add any actual value whatsoever. And it actually can create bubbles as well, right? But that'll bring us to our next discussion, which is over here, right? A lot of people that I was speaking to last week were super, super emotional because they were seeing these new traders come out of nowhere and post these gains of, 100K, 150K, 200K, whatever it is, in the span of a few days on a minute investment on Tesla, right? I believe the $1,900 strike calls were trading at $700 a couple weeks ago, and they ended up being worth roughly 20 grand on Friday, right? So massive gains to be had, obviously, right? But there's no rhyme or reason as to why this is occurring, right? It is purely speculation. It's entirely a casino, right? So what I want to talk to you guys about is managing your emotions and your psychology, right? And refraining from FOMO, fear of missing out, right? So what is the fear of missing out? The fear of missing out is the belief that each opportunity is very unique and very rare, and that it must be acted upon for fear that such a unique opportunity may never again present itself, right? That's a totally erroneous notion, right? Every single day, there are opportunities in the market, every single day, and there will always continue to be opportunities in the market, right? It's all about being patient and waiting for the appropriate opportunity to arise, where you have a high probability of profit, you have good asymmetry of risk, and you have a good thesis, a strong thesis, right? And A lot of people were emotional last week. And one guy from our group was mentioning that he was, kind of upset because he's watching everyone else make crazy boatloads of money, and here he is making, a few $100s each week, right? And there's nothing wrong with what he's doing, right? Because you're focusing on being consistent and using a probability-driven strategy. These guys making all this money, they're no different than the guy at the casino betting on 00 on roulette, right? They're the exact same person. The same trades that cause you to make massive gains are the same trades that cause you to blow up your account and go bankrupt, essentially, right? So remember that. Consider that when you're getting emotional seeing someone else post their trades. And remember that when people are posting these crazy large gains, those same people, chances are they've lost a lot of money along the way trying to achieve those exact same trades, right? So again, emotionally charged trades are devoid of logic, which results in minimal probabilistic thinking or risk management, potentially leading to devastating losses or outcomes, right? Before you click that mouse and submit your order, stop and consider how you would feel if you were to lose whatever money you were putting up into the trade. If the pain of losing would be too powerful to withstand, do not take the trade, right? Document your emotions in your trading journal, right? Again, the average journal you can pull up your notepad if you want to on a MacBook or on a PC, and just document, whatever the date is, what's the ticker symbol, why do you want to trade it, why do you not want to trade it, what was the outcome, what was your thesis, what was your time horizon, what was your maximum risk, what was your desired profit, what was your maximum loss based on your stop loss if you're going to use a stop loss, right? All these things should be documented, right? Because then you can look back for posterity, read your journal, and you can self-reflect. That's how you grow mentally, right? You want to be working out your mind muscle, because if you're not working that out, you're not developing as a trader, right? And there's an interesting quote that I heard on Joe Rogan, right? He said, "Put some miles on your mind, build up your psyche," right? It was in a random podcast I was listening to, but either way, it got me to thinking about, some of the newer guys that are trading now. You got to put some miles on your mind, right? You got to build up that scar tissue in your head that'll allow you to withstand hard trades, right? There will be tough losses to be had. I've experienced tough losses before. It's like playing poker and understanding the probabilities and having a bad beat, right? Same idea. And documenting your emotions includes, why are you taking the trade and what is your thesis? How will you adjust your position? Are you trading with money you can afford to lose? Is your position size too large? What is the probability of profit on the trade? Does the trade make sense, or are you merely following the crowd? Remember that those who are displaying large gains, as I said before, have lost a lot of money on losing trades. The same trades that hit home runs are the same trades that lead to ruin, right? And again, opportunities always abound. Do not get caught up in the hype, right? And to the right, you see over here what someone posted on a editorial for CNBC, and it says, what missing out on $150,000 in Tesla gains taught him about good investing. I feel like an idiot. Hindsight bias is great, right? But the flip side of that is, what if Tesla plummeted to $100 or $50? You'd feel like a genius, right? Hindsight is a terrible thing in trading, because it causes you to make decisions based on what happened previously, when there's no assurance that you're going to have the same outcome on the next trade. So I might buy a call option or a stock. It might rocket in value. I sell it early, it rockets more. Or I might take my profits and it goes back down again, right? Case in point, Virgin Galactic, right? A few weeks ago it was at $27. Now it's at $16, $17, right? Someone could have said, you know what? I'm gonna hang on, and it's going up to $40. I'm gonna hang on to that stock, right? And then it pulls back to 16, $17 again, and the person's like, I'm an idiot. I should have sold. I had massive gains on the table. Why didn't I sell? That same person could be this person here posting about their Tesla trade, right? What if it ran? Coulda, woulda, shoulda. The past is the past. Focus on the future. Don't focus on the past, right? That's all there is to it. One second, I'm just meeting a few guys here. Yeah. So that's what I wanted to mention about that. And then I also wanted to point out as well the chart of, let me see if I can pull up the NASDAQ long-term chart. One sec. 20 years. I need more than that. Custom undo 22 years. Okay. All right. So here's the chart of the NASDAQ, right? I'm going to focus in on this area over here. So if you guys were to say, you know, I'm going to keep on buying tech stocks, right? All the way up from 60 to 120, right? What would you want to be doing over here? Would you want to be buying, you know, Apple or Google or Facebook or Amazon right here? Even though Facebook wasn't trading back then, I know that, right? But the point is this is what happened on the tech bubble burst, right? Everyone thought it was going to go up and up and up forever, right? This is back in March 19th of 2000. You fast forward a little bit and you see what happened, right? There was immense pain to be had. And the number of people that were leveraging up and buying stock near all-time highs at ridiculous valuations was astronomical back then. And right now you're seeing the same thing happen. You're seeing people pile in. Like, I'll just go back to the normal chart again. You guys can see, what does this look like right here, right? If I were to focus in on this, same thing, right? You're thinking, okay, it's going to keep running and running and running and running. Sure. And yes, the argument can be made that the Fed is here now. It's different. But remember that value is value. Price is what you pay. Value is what you get. If you're paying for Tesla at 1,000 times forward earnings, you're not getting value whatsoever. Your probability of profit is very low, right? And your expected value is actually, I would say, negative, right? Because valuing a corporation for what they can do in the future based on a smaller sample size of the past, right? And again, Tesla has had their hiccups, right? It's not a prudent move to chase stocks with other people because they're making money in it, right? I try to avoid that. And you want to avoid that too, because the idea is to be consistent, right? Sorry. Be consistent, not go for the home runs. Don't follow the crowd. The crowd can be right sometimes, but in frenzies, the market can turn around very fast and you can get totally ruined. And the probability is, as sad as it is, most people that are making a lot of money right now are the same guys you're going to hear about losing their shirts in a few months or maybe within a year, because they kept on betting the farm on a further and further rise. They're like gamblers, right? They just keep on gambling and gambling and gambling. They don't know when to stop. They don't know when to take some profits and take them out of their accounts, right? That's what happens all the time. I've seen it happen many a time, right? Don't get caught up in that, okay? Because for all we know, this spot right here could be the same spot we were at back in March of 2000 before we fell down, right? I'm not saying it is, but it could be, right? So hopefully that kind of gives you guys a better like a mental framework to work with as you plan your trades over the coming weeks, right? Let's go back to the presentation. So earnings for the week ahead. It's kind of a quiet week. There are a few bigger names reporting. There's Best Buy on Tuesday before open. There's Scotiabank and BMO, which are two big banks in Canada. Salesforce and Intuit and Autodesk report after hours on Tuesday as well. Also, Urban Outfitters and Nordstrom for retailers. Wednesday before open, Dick's Sporting Goods reports. Also, Royal Bank of Canada. And after hours on Wednesday, you have Box reporting, Splunk, and NetApp. Those are all SaaS-based companies. Thursday, you have Dollar General in the morning and Dollar Tree. Those should have interesting moves, considering that they do pretty well in recessionary environments, which we're in right now. You also have TD Bank. So you have the big, I think you have 4 or 5 of the big banks. Yeah, CIBC is right there as well. So you have the 5 big banks in Canada reporting this week, right? That should be interesting for the Toronto stock market if you're watching that at all, which I don't really follow too much myself. Then you have Okta after close on Thursday. You have Marvell, which is a semiconductor stock as well. That should move that SMH ETF, right? And you have Ulta Beauty as well, right? And also VMware. So there are some names to be trading this week. Obviously, you got to look for liquidity, right? Make sure you look for high open interest, and tight bid-ask spreads if you are going to trade the options, right? And the SPY analysis for the week. So we closed at an all-time high of 339.44. The EM for the week is 455 or 1.3%. The PM for the week, $6.47 or 2%. The upper move is almost 346 and the lower move is 333 roughly. For the NASDAQ, again, we closed at an all-time high on Friday as well, largely spurred by Apple. They closed at 282.09. The EM for the week, 6.25 or 2.2%. And the PM for the week is 8.63 or 3%. Upper move is 291 roughly, and lower move is 273 and change. And again, thank you very much, Frankie, for doing the EMs and PMs for the week. The Russell Small Cap Index, they had a pretty poor week. They're looking weak overall, given that the market's hitting new highs on the S&P and the NASDAQ. But again, small caps aren't going to rise because they don't have an Apple or a Facebook or an Amazon or a Tesla, right? Right now, the market's being driven by a very small group of companies, namely the FANG Man and also Tesla as well, right? Keep that in mind. I believe currently in the Dow Jones Industrial Average, Apple comprises, I believe it's 23% of the overall index, which is insane because there are 30 companies in there, right? For one corporation to control 23% of the index is insane, right? And I believe Microsoft has a weighted average in that. Sorry, not weighted average, but the proportion of the index that's Microsoft is around, I think it's around 21%. So combined, they have about 44% of the overall Dow Jones index, which is insane, right? So you have two corporations that make up almost half the index. It's nuts, right? Either way, the upper move on the Russell this week is 159.44, lower move 149.74. And then here are the tickers from last week that we analyzed. So we had Apple close outside after that massive run on Friday, right? We had Amazon close outside as well. We had John Deere breach, but close inside of their range. We had GLD breach, but close inside of the range as well. We had Google close outside the range. Also, Microsoft breached, but pulled back within the range as well. Nikola closed outside the range to the downside. NVIDIA breached on the upside, but closed inside the range. And then we also had, what is this? Triple Q closing outside the range to the upside. And we also had Spotify, Square, Target, Tesla, and Wayfair, as well as Zoom, closing outside the range, right? So we had a massive movement in tech last week. Again, a lot of frothy companies right now. And you want to be careful with what you're buying here because, again, as I mentioned before, right? Price is what you pay, value is what you get. If you're paying 1,000 times for earnings, expect that unless a corporation does phenomenally well and increases their revenues and net income at a very fast clip, you're going to probably have a bad time. For this week, here are the following tickers, upper and lower EMs and PMs. Obviously, depending on what you're trading, go over this on your own and use them as a barometer for where you can enter and exit trades. I prefer to use these as alerts. So, for example, I'll analyze, Apple. I'll pull up the chart and I'll set an alert for 528.25. And I'll set an alert for 466.55. So if I'm watching my charts during the day and all of a sudden an alert goes off, telling me that it's breached the upside or the downside, I can then go ahead and decide if I want to, selling out of the money credit spread, or if I want to do a reversal trade, betting on it pulling back in the range, right? That's how they're meant to be used. And again, it isn't perfect, but it's a good metric to use to decide when to get into or out of a trade. Trade idea for the week actually is on Apple. So I thought, why not do an iron condor, given that the implied volatility is super high. So this is the IV chart for the past 6 months. You can see that the September OPEX is at 42.7%, which is pretty high. It's the highest point it's been since back in April, right? Which is a time when we had much more volatility. So what I would do now if I were taking this trade, and again, I'm not gonna do it myself, guaranteed. I'm just analyzing so you guys can learn a bit more about how I think. But I would sell the call side first, right? Here it is. So, sell the call side 5 wide at the 0.8 delta or 0.88 delta. So 0.088 delta, and I would sell the put side at the same delta level as well. So you would sell the 425 call. You'd sell the 600 strike call option. You buy the 605, and then you'd sell the 430 put option, and buy the 425 put right there as well, right? Your net credit would be the midpoint over here. It'd be around 70 cents. Your maximum risk would be the spread width, which is 5 minus your credit, 70 cents. Therefore, your maximum risk would be 430, right? Now, the reason why I would be patient is because I would leg into it, sell the call side first on a pop. Perhaps tomorrow, if we're up in the morning, sell the call side first, and then wait for a small drop, sell the put side, right? Because it's very, very high right now on the charts, and I think there should be a pullback this week or next week, right? Again, this is a pretty conservative trade. It's not a home run trade, but it's the kind of trade that you can take, that you can emulate, and make part of your strategy, right? When you're spotting high implied volatility rank, right, or percentile, you can see that the premiums are much more expensive than usual, right? And take advantage of that by selling options instead of buying options, right? So hopefully that helps you guys in constructing ideas. I know that Dan Foam, he asked me to look at SPY this week. I don't believe he's actually in our chat right now, in our session. I don't think he is. But he wanted to look at SPY, and he wanted to do a bearish position. I believe it was a month out or so, and his target was 320 on SPY. So if I pull up the chart on SPY, look at here. 1 second, sorry guys, I'm changing screens. So his target was 320 over here, which is a reasonable target a month out, given how much we've ran. If I were to analyze that and decide to take a trade there, flip the option chain. 1 sec. Option chain. So let's go a month out, right? September 18th is only 26 days. Let's go with a bit more time there. Perhaps we go to October 16th, right? You're getting near the election as well. And if my target was 320, I'd probably do a call spread. A put spread. So I'd purchase probably the 330 strike, which has a delta of 0.36. I could then sell the 320 strike for a delta of 0.25. My net delta risk is about 0.1, meaning that for every $1 movement in SPY, I would make or lose 10 cents on my spread. And right now you're risking about $2.05 to make a max profit of 10 wide over here. So your max profit would be $7.95. So you have roughly 4-to-1 risk reward. You have a reasonable probability of profit, and you have a lot of time. You have 2 months for this to transpire. That means that over the next 2 months, you can look at the chart and say, okay, do I think that in the next 2 months, SPY will not at some point come down somewhere in this area? Even at 330, you'd still generate a nice profit there, especially if it was near the expiration date, right? Keep in mind, you don't need to go for the max profit. You can go for a double up if you want to, or even a 50% gain, right? What I would do personally is I'd probably buy more than one contract, and on a double up, sell one contract to, or sell half my position to cover my entire risk and ride the rest of it to fruition, right? Because then you're limiting all risk, and you have 4-to-1 upside still, right? That's a great position to be in. This trade would require a lot more patience, and it isn't very sexy, but it's the kind of trade that you want to take, because think about it. You're buying the October expiration, which is about 2.5 weeks before the election, and you have 2 months almost until expiration from now, right? So you're pretty much saying that at some point between now and 2 months from now, SPY should have some kind of pullback that will allow me to generate a profit on my trade, right? If I believe that thesis, I enter the trade, manage my risk, right? Again, small portfolio allocation. You don't go with 10% or 20% like some people are saying. I've seen videos of people saying 20% is fine. That's stupid, right? If your portfolio is small, obviously it's hard to do this kind of stuff. But let's say you have a 10K portfolio and you risk 2% of your portfolio, right? You buy one contract. if you hit it big and you win, you make $800 almost. You make 8% return on your portfolio, risking 2%. If you lose, keep in mind, you won't lose your entire amount. You might lose half of it. You're losing 1%. So in reality, you're risking 1% of your portfolio to make possibly 8%, right? That trade-off is very, very good. Don't go heavy into that trade. Don't say, you know what, I'm confident in this trade, I'm going to put 20% in, because if you lose, now you got to make up 10% or 11% just to be back to break even again, right? Manage your risk at all times. Okay, guys? That's all I have to say about the market today. I've got a bit of a headache, so I'll pass it on to Rick if he wants to talk about his Heikin Ashi stuff. Rick, you ready to rock and roll? I'm going to pass the screen to you.
Okay. Yeah. Wait. Can you hear me?
Yep.
Okay, cool. Perfect. So yeah, go ahead and do that.
All right, I'll pass it over to you 1 sec. There you are. Make host. All right, you got it.
All right, let me share screen. And okay, well, hold on. I can share. Can I just share my goal screen? Because I'm going to be switching to calculator.
Let me see 1 sec.
Or if that's, can I change it?
You can, yeah. So I think if you go to share screen, you can go choose to share a certain application or your whole screen if you want.
Okay, well, I'll just do this for now.
Okay.
I was just doing the calculator thing so that you guys could go over it with me, so that you guys can see that I'm not making this stuff up. So anyway, I was going to go over parabolic movements and how to play them and how to identify price targets that are accurate, right? So we'll be using Tesla, AMD, Amazon, and NVIDIA is going to be the next one that I think is going to hit. That's why I got in. So with the most, let's say the most, well, let's do AMD. It's one of the most clear and most recent parabolic runs, right? You see this? So the way to play this is you have to be able to hold on and wait for this initial first bump to happen. So when you see this kind of stuff happen, let's just go over here, you don't really think anything of it. There's no way to guess unless you have a crystal ball or something. But when you see this pattern right here start to play out, right there, just like this, you can, this is, and I got this from another group that sees this kind of similar thing. And this is these are bases and steps, right? So it's not really a clear base, but it's obviously bounce, jump, bounce, jump, bounce, jump, bounce. And there's a very easy way to determine a price target on it, on the final one from here. Mm-hmm. And that is, you can see the price, it moves from here to here, but only moves about $2. So you need something that constitutes a parabolic move in order to really start calculating. So from here to 61 down here, I would say this could be the beginning of it. Mm-hmm. From here to here. So 59 to 68, roughly, right? 59.
Yeah, massive move, yeah.
So 59 to 68 is $9. So 59 plus 9 is $9. And now with this established, there's going to be at least 2 more moves this way. So you just do plus 9 again, that brings you to 77, plus 9 again, that brings you to 86. So 77 is here, and then 86 is here.
Wow.
Right? And you see the same pattern in Tesla in the most recent one. This one was a $250 move, right? From the base of it, which sitting at 1400. And when I got into my lotto, it was here. Mm-hmm. Yeah, I posted it on that day, August 19th. So from this base to this base, where it bounces off the 9 EMA, right? It just it bounces, it rips, and it you can see it takes the 12th and the 13th and 14th to do it. So some of these take 1 day, some of these take 2 days or 3 days to get ready for the next move. But either way, it will do it. So it depends on the length of how long it goes for, that you select your thing. That's why you have to wait out the you have to wait until you get to here. You can catch it here maybe, but this could just be another pop. You don't know. It's not a parabolic move until it gets to here. You see what I mean? Because if it gets to here, it could just be like any other day where it, pops way above and then just drops.
Yeah.
Right? It could just be like this kind of, but this is at the end of a parabolic move too.
Yeah.
But it could be just like this, where you see it pop up, and you see consolidate, and you're like, all right, I'm gonna go in, and then the next day you just get shredded, right?
Yeah.
So you really have to wait for the second step to form before you can do that, because not only will you get shredded, are you likely to get shredded if it doesn't go your way, but you can also determine your price target from here. So from here, 14 about 1390 1400 to about 1650 is about a $250 move, right? So you do 1650 plus 250. The next step should be at 1900, right? And look at that, we're at 1900 right there. This entire day we just consolidate around 1900, and then plus another one puts us at 2150. Now we fell short of 2150
Mhm.
today, or the previous day, but that's where the consolidation happens right here. It should be happening around, if it doesn't, because it's already bumped this, but it hasn't done like this, I guess. I don't really know how to enunciate that, but it hasn't really like consolidated at that area. So it could just go sideways for about another day and then pop, or it could just immediately pop tomorrow, because it looks like we're going to have a good day tomorrow.
Mhm.
But past that, the ranges are kind of flexible, but you can expect it to land in the area of like 2300, 2350 maybe for the final target. And you can refer back to this one as well. Let me just drag this and do that. Okay, so this is basing around about 980, let's say. And then the next base is around 1120. So let's see, 1120 minus 980 is 140. So it's a $140 move. So a 980 plus 140. And then again is 1260. So the next one should be around 1260, which again, it falls short. It falls $50 short. But the next one after that should be 1400. And that's this entire range up here. It just makes it all back at 1400, because it's following that. The next consolidation period is at 1400. And it fell short one day, but made up for the rest of it here. And then again, we go to 1540, but it just straight rips through. And if you do it again, you land at 1680, which puts you here. And do it again, 1820, but it falls short of that. So it's flexible,
Mhm.
but it's also pretty accurate. That's why you want to like go as conservative as possible with these, but still like out of the money enough to be able to hit a good number. And after that you get a nice sell off, because that's just how these things end. Like with AMD, you had like a $10 sell off, right? So where is it? Yeah, you had this entire steep curve here. You had from 86 shorting all the way down to 76 at the lowest.
Mhm.
And Amazon, I think you get two separate instances of it, and I think one of them is definitely earnings, but this one fascinated me because it was freaking accurate to the max. So this one was like 2680, right? So we calculate 2680. Hold on. Plus, you have to calculate at the end of the base. You can see that it ends at 1430, which is the end of the trading day. So about 2900. So that's about a $220 move, right? If you hit that button again from 2900, you go to 3120. And 3120, so this one again falls short at the next base, but makes up for it here.
Mhm.
And the final target is 3340 if you calculate it. And this one hits 3344 at the high. So 220 plus 220 plus 220 off the original base is 3340. And that's exactly what that was. So in the range, sometimes it'll hit it spot on, like you saw Tesla hit 1900 and this one hit 2900 directly. But sometimes it'll do this kind of ladder stuff and just fall short. and it'll just kind of melt up and melt up and melt up, but it will hit its final target. As you can see with all the other ones, they all hit. Like AMD hit 86, Tesla hit 1680, this one hit 3400, and back here too, it had another one. I think it was earnings again, or I can't remember what it was. Yeah, this one was earnings when Amazon's at 1900. So we'll go 1900 plus, let's see what the end of the first move was. 1900 plus, so it's about 140, $130 move. So it'll be plus 130. So that puts us at 2030, and then 2030 plus 130 is 2160. And then we do it again and again. So doing it 3 times in a row puts us at 2420, and 2420 is like right there, end of the move.
That's pretty interesting. Yeah, and one observation is too that you don't see it ever break the 90 EMA at all, right? That's kind of like a signal for staying above there. And
yeah, like you just see it kind of bounce off of it every time. It never dips under it. It always just goes straight to it. Or sometimes
was that the 9-day?
Yeah, the 9-day EMA. Like it just does that. That's just something that I have on for this because I like it a lot. But for parabolic moves, it just kisses it and then moves like this. It dipped under for the move and then kissed and then kind of never closed under, but kisses it and moves forward. So it's really interesting to see this stuff play out because the targets are actually really, really accurate despite the intraday movements. Like it just melts up sometimes, and sometimes, like you saw with AMD, it goes up, consolidate, up, consolidate, up, consolidate, and this one it just melted up. So they played differently, but the important takeaway is that there is like a starting step, and then there's a base, and you can calculate from here to here, and then like plus 3, I think, is the final target, which is up here. So I calculated, well, it's actually like 18. It's actually more accurate than like 1890-ish to about 2030-ish, and then
140 or so.
Yeah.
So you're saying most of these have like a three-tier move?
Yeah, something like that. Yeah, they have like a 3-tier move. Some of these have more. Like Tesla early on had like 5 or 6, or like 5. Where was it? Give it to me. Where is it? This one. This one was super long. Like this one started here and kind of melted up and then hit here. That's like 1. This is 2. This is like a 2-day one. This is like 3 and has a really extended base 3, and then it goes to 4 and immediately dies. Like this one just acted really weird, but it played out in almost in the same way with the price target. Price target for this one was at 1680, and it just crushed it all the way up to 17 something. So, and it just fell short of the next one, which was 1820. The highest one was 1792, and it just fell $20 short of that. So it was really close to making it there, but then obviously, as you can see, it just died right afterwards. So the movement was kind of more Fomo than anything else on that one.
Yeah, that's interesting. And if you use, wide out of the money call spreads, your asymmetry of risk is insane. Even though you're probably high, but
I have. Yeah. Oh, sorry. I have for the Tesla lottos. They're at $1 that I bought them, and I have up to $49 to make.
That's insane. Yeah. So you're
what strikes did you get for that? They're obviously not $1 anymore.
No, they're like $3 or something like that right now.
Still worth it.
Yeah, absolutely. And I've only capped off like a couple of them to seal in some profit, just in case.
Yeah, if you bought 10 of those, then you could have double your money and 10, and 2 or 3 left to ride.
Yeah, I have 5 contracts left, and right now they're sitting at, well, Robinhood has like weird spreads, but right now they're sitting at 218 because of the sell-off.
But what is the spread? I can math it out right now too.
2450 to 2500 for 828.
24. So for Friday.
Yeah.
2450, 2500. Let's see. 2450, 2500. Yeah. So if I build that right now, if I buy the 2450, sell 2500. Current midpoint is around like $2.25.
Oh, cool. So I'm about 125% up right now.
Yeah. So as I was mentioning before, guys, like if you bought 2 contracts, for example, you could sell one contract right now. If Rick got in for $1 and bought 2 contracts, he sells one contract now for $225. He's guaranteed himself a profit of $25. He sells one contract left for free, which has upside of $5,000. Like, that's insane, right? So
Yeah.
your risk reward is massive. If your portfolio is 20K and you risk, for $200 in or even 10K, and you risk $200 in a trade, that's 2% of your portfolio at risk. You sell one contract at a double up, so you eliminate all your original risk. And your upside is $5,000.
Yeah.
You hit a trade, you make 50% return on your portfolio with no risk. It's insane.
So what's your targets on NVIDIA using this strategy?
I actually mapped this out. Where is it? I just had it. There it is. So you can see that, this is the point to get to. I think final target is either 520 or 540. I haven't really, because it feels like it's moving stronger than before, so I feel like it might hit 540. But you
Can
can
we
see the
look at
base
the chart
forming.
right quick?
Yeah. So where is it? There it is. Let's go this way.
It's already almost 500, isn't it?
Oh yeah, it hit 510, 512 already. So it's going to 520. That's a fact, I think. It just needs to consolidate a few more days.
It's almost there, really, already.
Yeah, it just needs to consolidate. Again, it needs to kiss this little bit. And that's why I got a diagonal, because I knew it was going to pop, but I knew that it was so I got a diagonal for 828. And so I sold the 515 for this week coming up, the 28th. And I bought the September 4th 500 call. So I'm closer to the money on my buy, further away from the money on the sell, but the further away from the money is expiring closer. And given the previous parabolic patterns, I knew that it needed to consolidate, right? So that's why I chose to do the diagonal, so I could rip the credit on the consolidation. And then as soon as I see that because it always happens at the end of the day, look, this is 14:30. That's the way I have my end of the day set. And the next day, boom. This is 14:30, end of the day, boom. And then this is a consolidation day. But every single day, it always gaps up on parabolic moves. Every single day. Doesn't matter what happens, right? Or not every day, but
so this
every
would
time
be like,
Hmm?
this would be like, so the first one would be like where you're talking about, it's just like, it could be a high day, you don't know. And then the second move here would be the first part of the parabolic move right there.
Right. So this could just be a high, like a day that where it just rips and then it, consolidate or does something. It doesn't, there's nothing to
So
compare
this would be
to.
your first leg here in the middle.
This right here, this is when I got in because I saw this. And I was like, okay, well, I can calculate this and this and this. So I can calculate the end of it. So I calculated 520 to 540. But I was very confident that it wasn't going to hit
So
520
or 540 would be this.
Correct. Yes. That's why I only have the
second
one.
move. That would be the second move, you think?
So this is 1, this is 2, this is 3, and then 4 is 540. I think it's going to 540.
Okay. I see.
But I'm almost inclined to just take it off at 520 just to be safe. But I guess we'll see. If it breaks down, then whatever. I think I'm just gonna wait until 540 because that's what I've gotten so far from all of this, and I'm just gonna stick to that. So the reason I chose to do the diagonal was because I knew it needed to consolidate before the biggest move, because it always does, right? So this was ER, basically. It just traded flat for ER, I think. Yeah, it just traded flat for ER. Like, it was already making the parabolic move, but it just, ER hit, and then it killed premiums across the board, blah, blah. And this was, like, basically perfect for me. Because then I could sell that call, wait for it to consolidate, and then as soon as I see it doing the thing where it starts to kiss this 90 MA with like red candle or green candle, it doesn't matter. As long as this is really small, right? Then I know that the range is trading very tightly and it's getting ready to pop the next day. So at that point, I would let go of my short call and just ride the long call, right? And because I'm in the money, I'm like $10 in the money right now. No, wait, like $7 in the money. So even if it comes down, I don't lose as much as I would on out of the money call.
Yeah.
And I'm still playing with profits basically from the short call that I use to consolidate. So best case scenario is I get like a dollar or two, like a dollar or so more out of the premium back from the short call, and then I just ride the long call up to 540.
Mhm.
But I hope that it consolidates for like 2 more days so that my short call can get a little more work in. Because right now the theta on my short call is sitting at 84 cents a day. So I'd get like $1.70 in 2 days.
Yeah.
Hey Rick,
Like,
I got a question for you.
mhm.
Do you mind taking a look at Virgin Galactic? I'm
Oh,
asking
absolutely
because
not. I just don't have it on here because I don't think it works. I've tried it once before and I don't think it works for my strategy.
well, from the perspective of like I've established a position, and I'm wondering if you have an opinion on when it would bottom out for me to average out.
Oh, I think it would bottom out here for a good while at 15. That's why I've been saying earlier in the chat, I've been saying 15 is a good place for me to buy personally, because if you look at this, I mean, it's kind of hard to tell with these candles, but it kind of looks like a Head and Shoulders, you know? And it looks like this is the shoulder bit and it's already breaking down from the shoulder and it's going to its next support level at 15. That's what I think, you know? It's hit once, twice, 3 times, like, and over here it's at 12, whatever, but it's hit here as well. So once, twice, 3 times, 4 times. So 15 for me is a safe place to buy. If it goes below that, I'm happy to buy more at a lower level, but I feel safe going in with like equity or leaps at 15, just because it's such a forward looking company and it's kind of a cult Momo stock. So like they really aren't kind of going to let it die.
Yeah.
And that's a really good place to load up for me personally, but that's what I think about it.
Yeah, and at 15, the asymmetry of risk is insane too, because like, you know, people are gonna be trying to short it at 15.
Yeah.
And
After it's already made a move from like $30.
Exactly, right? Exactly. So the upside probability is much higher than the downside probability at 15.
Yeah.
And then when it does get moving, it'll really run if there's a lot of shortage.
Yeah, absolutely. Because it's another one of those meme stocks. It's a gold stock. It just goes.
Yeah.
Right?
And then when they have a
This thing-
SpaceX launch, will be golden.
Yep. And as SpaceX gets more successful, the outlook on privately owned space companies gets better, and this is one of those. So like,
Mhm.
you have nothing to look forward to but upside. I think. But if it does go lower, then I mean it goes lower, and you just get to buy cheaper. So.
Exactly. Yeah. Longer term, right? I mean, you can always roll out like you can go from January of 2021 to one more year out to 2022 if you wanted to, or you can buy the equity itself and sell covered calls every week because there is good premium on it. So if you're able to buy at $15 a share and sell, 1 week or 2 week out, $2 out of the money calls for say 50 cents, you're pulling in a nice return there, right? Like if you're pulling in,
I was getting like 70 cents. That's what I did last week. So
yeah, it's a lot of premium, like even on a short term basis, right? Like let's say conservatively pull in, 50 cents on a $15 stock position, you're in a week, you're pulling in 3.3% in a week, right? And if you do that every week, all you're doing is you're just lowering your average cost. Like initially from week 1, you go down to 14.50, then you're down to 14, 13.50, so on and so forth. The only caveat being that if you are selling covered calls, when the pop occurs, then you're going to lose your shares. So
that's why I only sell like half of them.
Yeah, exactly. Yes, yeah. So you want to use a lower delta position than your overall position, right? So if you have for example like 300 shares, you might sell 2 contracts or 1 contract, or if you have 500 shares or 1,000 shares, you might sell 500 contracts. 5 contracts or 6 contracts, not your entire position, right? So you keep upside, but you're gradually reducing your overall risk gradually, and you're pulling in income as well, right? So it's kind of like you're getting paid a dividend to wait for the pop, right? If you buy leaps deep in the money, like for example, the $10 calls right now for January 2021 are about 750, I believe. So your break even is 1750. So you need to sell above that strike price in order to attain a positive result if it pops up, right? But if you can pull in, for example, like 50 cents every few weeks, you're just shaving off risk and you're pulling in insane returns. Like you're pulling in roughly 6.6% return on a 750 leap position if you're pulling in 50 cents, right? Like that's a very, very nice return for a slow and steady approach. And all you're doing is reducing your risk. If it holds around 15 or 16 for 7-8 weeks in a row, all you've done is reduce the average cost from 750 down to $450 or $4, right? Now your break even is 1450, And if you want to, hang on to the position and not sell more poor man's covered calls, you just don't do it anymore, or you sell a partial position, or you gradually reduce your position to the point where you're selling, 1 or 2 contracts instead of selling, 10 contracts or whatever against your lot. And if and when it pops, you experience a nice big portfolio return.
Yeah.
I just look at it as like, I can't be mad if I lose the share, because I bought extra shares to average down anyway. So you can't be mad if you sell your average down shares for a profit and lower your cost basis on your original position.
Exactly.
You know what I mean?
Exactly. Yeah. 100%, man.
Yeah. So another thing I wanted to tack on to the Tesla thing is that this one is definitely one of the stocks that when it goes, and that kind of also applies to the parabolic trend, because here it took a long time in forming this like base 3, but because it's 1, 2, this kind of is like 2, 2.5, maybe 3, 4, 5, and then we saw a pop to 6 or 5, depending on, because it's kind of muddy down here, so you can't really tell, but it overextended on that. So the overall strategy I had for the Tesla one was to hit 2350 as the final target. And if it did, and this could go for multiple reasons, but if it did go another jump, it would hit 2500. Let me see, it was 1400 to 250 move, so that would hit 2500. And 2500 is another one of those mental levels, just like 2000.
It's also, it'll be 500 a share once the split comes.
Yeah, exactly. Yeah. And 500 4 like 3. Well, what was it at when it started really moving? Like 350, right?
When it got over 3 is when it really started going. It got hung up for a while under 2 and in between 2 and 3, and then when it got over 3, it just really didn't stop.
Yeah. So 500 is a nice another mental level, like another magnet, I guess you could call it.
You say for this move, your target would be
2350 for the final target. 2350, 21, I think it was 21. I said 2120 earlier, but 21, like in that area, 2120 is like the next.
You've just been saying 2120 because you want it to be 420, I think, but
yeah. But no, that's also where I think I was calculating it earlier, was 2120, and then 2370 was the original one that I said. Yeah,
the final one.
2370, and then 2520, I think, was the next target. The final, like the extended target. So there's the original final target, which is 2350 to 70, and then there's 2500 and 2520 as the extended target, like the extra step, if we get it, because that does happen. We do get extra steps,
like the 1700 last time.
Yeah, it's like blowing past it, like to go $40 up, almost 50. So it could do that, because it almost extended into the extra step. The extra step was 1820. This one hit like 1790 something, 1790 something. So it landed like $20 something short. So that's why I'm gonna unload the majority. This is either like I've already secured, like I'm only losing like 20% of $100 at this point. So for me, it's whatever. So I'm just going to unload. I'm holding another week at 23, my target, and then gonna unload.
What's your spread again? I'm sorry.
It's 2450, 2500 for the end of the week.
Okay, awesome. That's like $2 and change right now.
225 right now. Yeah.
Yeah.
But that's
so if you hold that to the end of the year, or to the end of the week. What? Oh. Huh? But if it has to hit 2,500, doesn't it, for you to make money on that?
To get maximum profit on it, yes. But I mean, I don't think the stars are going to align like that.
You're just hoping it gets like 2,400, then you'll close it.
Yeah, to get to my target, and I'll close it, because I'm at that point, dude. Like, to move that much, like I'm only risking $1. I'll probably rip out like $20 or something like that. I don't need it to get to 49. I'm good. Yeah. But I really wanted to test the entry on parabolic patterns, because I've been observing them for a while now. So Amazon is one that I'm really hoping gets it too, because it also plays out, as you can tell, right? Like up kiss, and then boost, right? Yeah. This one split up perfectly. 2680. Like you have to keep in mind with the profit targets, they do get muddled up. Not the targets, but the intraday targets or the in between base targets. They get jumbled up. Sometimes it's like intraday, and sometimes it's in the morning or whatever. But like you can see here, 2680. Next target is 2900. That's the first step, and that's a $220 move. The next one should be 3120, but like it grinds the rest of the day, and then it peaks in the morning, doesn't hit 3120, and then drops, kind of just like Tesla did to the previous day. It didn't hit 2120. This one didn't hit 3120. It just hit like 3060, and then dropped to 3020. And Tesla hit like 2090 and dropped to 2050, right? But then the next day, it just started slowly grinding, and then another gap up and a grind, and then another gap, and then flat, and then a grind, and then boost to the final target, which was 30, I forgot what it was. It was 3340. Yeah, 3340, I think. And we're super close to that. So the point is that once you figure this out, once you figure from the start to the first base, you can figure out the rest of the targets. Or sorry, not the rest of the targets, but the yes, the rest of the targets, but also the final target, most importantly, right? And every time this happens, this consolidation always happens at the end of the day, right here, and then you get a boost, and then right here, end of day, and then a boost. So these are your entry points right here, these consolidations. But in order to do that, you have to be able to spot this pattern, right? Which is what I did with Tesla, and it's what I'm doing with AMD right now. Right? That's why I got into the diagonal. Now, hopefully it works out, because I got in after earnings, so I'm not sure if that'll mess it up, but it looks like it's going according to plan, right? So I get to rip a few dollars off my short call and protect my long call with that, and then I get to boost to 540 hopefully. And I might roll out. I might add to a position at the end of. I'm going to add to a position at the end of this consolidation, rolling out to a 550 short call.
That's smart. Yeah.
Yeah. So
basically, you're just waiting for the RSI to cool off, and it consolidate, and you're gonna go.
Yes, I'm because the RSI, like at this point, with the parabolic moves, the RSI is never going to floor itself, or sometimes it will. Like this, it floored itself right here, right?
But then you were super confident then, right? You were like, let's go.
Well, this was also after earnings, which was great.
That's when you went long, actually, wasn't it?
Yeah. So you see, look at this. Boom! It floored itself, but here it didn't, and it still boosted. So a lot, like a few times, or more often than not, the RSI will drop, but you can't expect it to floor itself, right? If it cools off, that's the most important thing. As long as it cools off, those are your entry points. You notice how the only red days or the only really good dip days are the ones where the RSI cools off and it's like red candles at the end of the day.
Mm-hmm.
Same with AMD here. It's the same thing. Boom, cool off.
Almost like a bear trap.
Yeah, cool off. It's like, oh man, it's finally gonna drop, and then it just boosts and boosts and boosts, and it's a pattern that repeats itself right here too. Cools off a bit. See how it doesn't floor itself? It's hovering in, like, it's cooling off, but it's not like gone. And same with here too. This is also end of day at 1430. Boom, cool off, and then boost. Right. So it's a pattern that's easy to spot and is a lot of fun to play. And I just really wanted to bring it to you guys' attention, because I will be hunting these things down, because these things are basically free money. Like, I don't want to say that they are, because obviously there's a lot of inherent risk, but we've seen these patterns play out multiple times for multiple reasons, be it stock splits or earnings beats or announcements or whatever. But once the pattern happens, it goes and it hits. I've shown you with the calculator, it repeats the target from here to here, and then it just carries on up to there. So yeah, let me just run through that calculator bit one more time for my own sake, because I want to remember the number. So 2980 plus 220, was it? No, 120 plus 120. So plus 120 is 3100, plus 120 is 3220, which happens like in the middle of the range, and then the final target is 3340, which happens here.
Yeah.
At 3344, and that's like insanely accurate and kind of scary, right?
So
But
what you're saying is that when you see these patterns unfold, you have a very high probability of profit trade.
yes, exactly, because it's, I mean, at this point, it's a pattern it's like, I think of it as like another one of those, like, you know, multi-day cup and handle patterns or head and shoulders patterns, like one of those things that actually physically plays out. And you can determine a target from the neckline to the bottom or to the top, or, you know, whatever. Like you can, it's just another one of those, but this is just on a more extreme scale. So I thought this would be really interesting to talk about because it's obviously very profitable. And I just wanted to bring to you, like, you have to, if you see parabolic moves like this, then you know that there's a price target. And now I'm showing you the way to calculate it and when to get in. So you can get in on the days where it cools off. But you have to wait. If you can't calculate it, then you shouldn't be getting in.
Yeah.
Basically. But that's what I'm here for. So
nice, man. That's super useful. I like this a lot.
yeah. And I swear I thought Apple was going on one too, but it's just melting up. Like it could, maybe. No, it can't. It's just melting. That's it. And it's disconnected from its consolidation. So it's gonna trade sideways heavily.
It's too high for it, I think.
Yeah. It's gonna trade sideways heavily at some point. Like if this consolidated and boosted again to 520 instead of just melting up like this would have been parabolic pattern. I swear.
Yeah, that's why I was looking at it with the idea for the week of doing iron condor, legging in by selling the call side first, and then waiting for a pullback to sell the put side, and then you have a nice,
nice little
around $120 or $130 perhaps on a 5 wide, you know, 3 or 4 weeks out, you know, for the monthly OPEX for September, and your asymmetry risk isn't great because it's an iron condor, which it never will be, but your probability of profit's very high.
Mm-hmm. This could be, I don't have the normal chart set up, but this could be a cup and handle here. Like, you know, just another thing. Yeah. Cause this Facebook is cooling down. And if it is a cup and handle, then it will cool off and consolidate before moving very much higher, like to 300, I want to say.
Yeah.
So, well, actually, 290 probably, maybe 285. But yeah, just thought I'd bring that to you guys' attention. Thought it was a cool idea.
Can I ask you how you determine your contract strike prices?
By the target price. So, like for example, Tesla, right? The most recent one. Like I said, I waited for this for this to play out basically. So you just catch it here. It's like 1400, and then from 1400 to 1642, 1640 is like $140, $150 move, or 240, 250.
Yeah.
So we say 1600, or sorry, 1400. Yeah. Plus 250.
Yeah, 1900, right where it went.
Yeah, 200 or 1900, right where it went the other day.
So then it would be 21. So we're looking for 2150 now.
Yes, that's the next stop, but the final target should be around 2350 to 2400, something like that, 2375. Like if we're getting really accurate with it, you can zoom in and get it, but you know, if we're just doing this quick approximation, that's how I determine the strike price, is by doing the calculation from here to here, extending it all the way to the end, which is like up here. And that's how I was like, but then I also took into account the fact that Tesla overextended its thing and tried to do another step. So that's why I bought the one step further out expiration, so that when it does get to my final target, I can scale most of them off and just leave the one running in case it does hit that level. And then if it does, then I make full profit on that, basically. And I'm okay with it.
Nice.
So you got the one that expires Friday or the one that expires a week from Friday?
The one that expires Friday, because this, you also have to take into account how quick it moves. Like Tesla moved from August 12th, we'll say 12th, 13, 14.
2 weeks. That's crazy.
So 12, 13, 14, consolidate for 2 days. And then next leg is 17, 18, 19. So it's 3 days. So this is 2 days, 3 days, and then 1, 2, and then I guess if we don't boost tomorrow, then we get one more day of consolidation. That's 3 days, right? So from the time that I got it, which was the 19th, I was like, all right, well, how long is it going to take me to get to the final step using the same amount of days? So I just doubled it over to the next side and got, all right, it's going to hit roughly my target at like just before the 28th, which also happens to be the 31st. That's the final day before the 31st, which is when you get the stock split. So it all lines up, right? So you just have to, the amount of days it takes to get from one step to the other, you have to calculate the distance from here to here, and then, extrapolate that to the final target. And that's how you figure out your target, your strike price, your target, and the amount of days it'll take to get there. So your expiration, all that stuff bundled together. I don't know. I probably said the same thing multiple times, but whatever.
Nice. I like it.
Yeah. So let's watch Tesla go to 2,300 for our sake, right? And then it can be shorted into the ground, because usually these things do have large sell-off periods. Like AMD, I showed you this Tesla drop from, I mean, we were all trading that day, like on voice. So we saw it. Oh, this is Amazon. So parabolic move to 33, to our target, 33. And then imagine short, because that's what I'm going to try this time. I'm going to take my profits and I'm just going to flip short. And it usually retraces to the first step or a little past the first step before that, right? Mm-hmm. So the one before 33, 33.40. What was the move on this? 220, right?
Just use half your profits.
I think it was 120 each step.
120? So it was 20. Yeah. Yeah, it was 120.
Yeah.
So
the thing is, though, it could go to another level, though, instead of selling off. You know?
It could, but your risk should already be mitigated by your profits, and it's also good risk reward to do that. Yeah. That's why when I did the original Tesla thing that I was doing, when it was like 1,300 going to 1,700, that's why I had a bunch of dead put spreads, because I was trying to scale into my puts.
Mm-hmm.
And I mean I lost like $600 on just the puts alone, but I made like a couple thousand on the way up. So like it was because I was getting used to the steps. I was like, all right, well, this has got to be it. Okay, well, no, this has got to be it. And so then, it took some time and buckled down and really started to look at the levels, and it doesn't start selling until, like, it can start consolidating and trading sideways and maybe even dip, but it's not worth scaling into put spreads yet. So that's what I was testing that time. So now I know that once it hits the final target, it could go one more step, but that just means I get to average down my puts and make double the money. So let's see. And now what I'm trying to do is like calculate the end of that. So it moved down 2 legs. So it moved from 33.40 down to 3,200 and then 30.60. And this hit around 29.50. So 1 or 2 legs down from the original seems to be the way to go. So AMD took down, it moved down to the first step and bounced back. The first step before this one. Tesla moved down, almost down to the first step before this one. So whatever the previous base was, that's what it moves down to. Like almost to the nose. Like it wicked straight down there.
Nice, man. That's
he's calling me. Hold on. And there we go. But yeah, that's how you do it. That's that. So the next time it goes, it'll be 23.70. So you're looking for a short down to 21.20. That's it.
Nice, man. I appreciate the analysis. I think it's very useful to look at this kind of stuff. Yeah, I wish they had Heikin Ashis on IB, but they don't. unfortunately.
But yeah, that'll do it for me.
All right. You want to pass the screen back to me, I guess, then?
Yeah, I'll let's see. How do I
Any
do that?
questions at all, guys, before we wrap up? We've already gone on for an hour and 50 minutes or so.
Yeah, sorry about that.
No,
Good shit, Rick.
not at all, man.
Thanks,
Yeah,
man.
that was great.
Yeah.
Go back here, I guess. Yeah, guys.
Yes.
Questions at all?
Thanks. Thanks for showing us that.
All right, guys. Well, yeah.
Wasn't Juice going to show us something too? Or no?
He wanted to, but he didn't make today's session, I believe. So
Oh, okay. That's cool.
yeah, maybe next week instead. Yeah.
All right.
Either way, guys. Yeah.
I'll catch you guys in chat.
Yeah, we'll see you guys
All right, man.
tomorrow morning in voice, bright and early. Let's make some
Yep.
catch tomorrow.
You. All right. Thanks, Nick.
See ya.
Domino's $5.99
Thanks, Nick.
makes the next deal.
Thanks, guys.
Night.